Hi everyone, welcome to this small topic of income statement, which is on when do you recognize your revenue? I'm very happy again that you know the reason already when it gets accrued. And what does accrual have to say about cash? All of you are aware. I don't care. That means to say that the entire process of accrual is only based on execution of that transaction, happening of that transaction, rather than worrying about the cash. A lot of people, more particularly from commerce, I'm very surprised, think that accrual means absence of cash. That's really not the definition. So to come back to my primary question of this video, when do I take a particular income to the income statement? Answer is when the accrual is complete. In this particular video, we're going to talk about what are the conditions that are required to assume, to think, to perceive that completeness under accrual. Does it happen when the delivery is done and that's about it? Don't you need any other thing? Do you need some kind of an agreement between a buyer and a seller? Do you need some kind of certainty about the payment consideration? These are the things that you got to worry about in this particular topic. So far, in all the previous sessions, in fact, I remember I telling you very, very clearly that the moment delivery is done, that's the point accrual is complete, and that's the date on which an income should be booked. But today, in this video, I'm going to just drill a little deeper down and give you 4, 5 conditions. In one of them, of course, is of delivery, but there are others as well which needs to be completed in order for that accrual to get complete. Okay, so let's look at these conditions. Right here they are. I want you to take a quick read of them and tell me if you made some sense. Well, as a matter of fact, some people already know that revenue recognition is a different accounting principle itself. Well, seems quite heavy. Revenue recognition. The key question that we are debating here, people, do not confuse, is when. What is that day on which my income statement see that greenery? That's broadly the point. And in case you have already read through, you would realize that these are very, very complicated looking statements. Risk and reward should be transferred. No continuing control, or management over the goods sold by the seller. From a seller's point of view, revenue should be reliably measured or measurable. At least you know that for how much money has been the sales value for. Ultimately, you got to enter it into the your books of accounts, and it has a monetary denomination is necessary. There is a probable flow. You see, I'm not talking about certainty, but even if there is a probable flow that your money is going to be received, then so what's the opposite of it? Well, the opposite of that is at the point of sale, you are damn sure that your money is not going to come. But sir, then why would we even sell to such a customer who is damn sure of not paying? Sometimes you're pushed to the wall. Let's say there is a company who is under bankruptcy, and bankruptcy is typically a situation where you would imagine the government or the courts have taken over that particular management and is selling the assets just to pay off the liability. So it's not something very bad to happen in life of a company. It's actually like a fat reducing operation by an external agency. If the company would have been managed well financially, then we say that company is exercising well. But here, in case of bankruptcy, there is an external help in terms of regulator, in terms of the court and all. Now, in such a case, what happens is the court many times order all the creditors not to stop the supply to this particular company, because the court is also not interested to shut the company down, because then the loss of the banks and all the other creditors are going to increase. The courts are also interested to make sure that whatever is a minimal damage, that's good enough. So the courts write to creditors that, boss, we want all the supplies to continue so that we can revive the company out of this problem. Now, in such a case, if you are a supplier, then You're selling to a company who is bankrupt. Your customer is under bankruptcy. Are you sure of receiving the money? I would place my bets against it. Now, in such a condition, is where that point number four is going to be important. Uh, and then, of course, finally there has to be an agreement between the buyer and the seller, because in case Flipkart delivers goods to a neighbor's address and at a wrong address, there is no agreement between Flipkart and that the wrong addressee, and therefore, just because of the fact that the goods are delivered, you can't really consider that as sale. So people, let me give you, a commonsensical way of looking at things. Honestly, these might be coming across as a little typical. Accrual is complete when the agreement is there between the buyer and seller. By fluke or by chance or by mistake, any delivery is not a delivery. Second, the delivery must be complete, meaning the seller should actually give it to the buyer. The seller should actually give it to the consumer, and consumer should own it. There has to be a cutoff point after which the customer says, now goods are my job. Now the goods are my risk. Goods are mine. And Mr. Seller, just step away. That is the point where the delivery is complete. And of course, there has to be some chances and good chances of payment being recovered in case it's a credit sale. In case of cash sale, then of course, in case of cash, that point is irrelevant. But in case it's a credit sale, then you must have some good chances of recoverability, because I remember the definition of asset is future probable economic benefit. So even if something is probable, I am absolutely okay to record that as an asset. So people, I'm going to stop this video here, and in the live classes, I'm going to take good 4-5 diverse examples where I'm going to challenge you to think about that day on which all these conditions are complete. Okay, so thank you very much for watching this video. I'm super excited to start this income statement with revenue recognition. See you very soon in the live class.